Thank you for having us at this tremendous event. Alan and I have been friends for 20 years. He went into the hedge fund business. I went into the politics business and more recently into banking. And one of the things that I've seen Alan do is build his business here in Abu Dhabi. So I'm going to start, Alan, just for those who know a bit about Brevan Howard, but perhaps not everything about Brevan Howard. Tell everyone about the incredible hedge fund business that you built that bears your name.
Thank you very much, George, for that wonderful introduction. So I started Brevan Howard about 20 years ago. We're a macro hedge fund with around 35 billion AUM. We have made about $28 billion for profits for our clients over that time. We're known for trying not to lose too much money, and therefore we haven't lost in any month or year more than a low single digit since we started, and that's given us confidence for our investors. We have about 1,000 people, 140 portfolio managers, and the dollar invested in us at the beginning 20 years ago is worth around $5.50 today.
Abu Dhabi, and it's for those who visit the office, this is not some brass nameplate on a door with all the kind of real business being done somewhere else in the world. It's being done here. And you must have had lots of other places you could have gone to do that. Why did you pick Abu Dhabi, and why did you decide to do it in the way you've done it, which is kind of all in?
There are multiple reasons, and the first one is about a year ago I met His Excellency Ahmed Jazim Al-Zabi, and it was very clear from that meeting that he's a pragmatic regulator who's worked in the private sector, therefore private financial sector, therefore understands our needs, whilst at the same time being a conservative regulator that can look at traditional markets as well as digital markets. And for us, the most important thing when we open an office is the strength of the regulator. And in this case, I felt extremely confident and was encouraged by all my meetings with Ahmed Jazim to get there. There's only one problem with Ahmed Jazim, and that is that he supports the wrong football team. Chelsea, so unfortunately.
That's my team. I've got no problem with
and then the multiple other reasons are, the second and most important reason for us is UK rule of law. When the ATGM was started 7-8 years ago by Ahmed Ali Al-Sayegh, as the first, one of the most important decisions he made was to have UK rule of law, and that gives you, again, good confidence. And you saw that in the decision on MSC Healthcare this year, UK rule of law is being implemented. That is extremely important for investors such as ourselves. What's underappreciated is the time zone for trading macro. This, I think, is the best time zone in the world to trade macro, better than anywhere else. You can see the BOJ or what's going on in Asia at the beginning of the day, and at the end of the day, you can see the Fed and what happens at a more reasonable time. So that is an incredible advantage of Abu Dhabi, and because of that, we've also moved our execution desk all to here because we do feel it's the best place to trade macro. The other reasons are, of course, the tax situation here allows us to encourage some people to move from other higher tax jurisdictions here, and also the Abrahamic Accords, the great vision of His Highness Mohammed bin Zayed to go ahead with prioritizing economic to help peace in the region it's a great thing. And if you get a chance, the Abrahamic Family House is it's the only one in the world where you have a mosque, church, and synagogue all together in the same area. And I've spent time visiting that. And when the idea started 3 years ago, there was some skepticism that it would actually get used. And this weekend they had over 2,000 people using that. So these are all the initial reasons which encouraged me to come here. Once you start thinking about that, it became clear to me that Abu Dhabi could become a global financial center. And to do that, it needs to focus on capital markets, which is trading and liquidity. If you think about the top 3 US banks, Morgan Stanley, JP, and Goldman Sachs, they make between 40 and 60% of their revenues from markets. So I think for Abu Dhabi to become that global financial center, which has a great opportunity, then that's the area it needs to focus on. Now, saying that, we have already 60 people here, and we will be 120 probably looking for a new office by end of first quarter next year. And the important part about that is we brought a lot of our senior people, because that's the way to help a financial center grow, by getting that human capital here. And the other thing I would say is that hedge funds sit at the top of the food chain, as we are, and that we are one of the top 10 clients for the banks globally in terms of the wallet they make from us, and the top non-US hedge fund in terms of what the banks make in terms of commissions from us. So as you get more top hedge funds with their top senior people coming here, that can lead to the banks having to send their best people as well to service correctly those traders and other parts of the financial sector, as well as all the ancillary services such as compliance, legal, which are more in a ratio of 4-to-1. So I think there's a great opportunity for this to become a financial center, and that's part of the reason we're here as well. And over time, that will generate cash flow for Abu Dhabi additional to its return it makes on its investments. And that balance is a great thing for the future. So those are all the reasons why we're here, and delighted.
I mean, I think the interesting thing is that people might have thought a couple of years ago that you didn't have to, what you're talking about is having physical people on the ground, that this can't be done remotely, that Abu Dhabi needs to encourage senior people in this industry, finance, to locate here. And you say you've got 120 people coming here, 60 already. Have you found it hard to get people to come here, or do you just order people to come here, or how do you persuade? Because you're in a famously competitive industry at the moment, where the top talent is competed for amongst you and your competitors. So how have you managed to persuade people, or do they not need persuading?
Yeah, it's been an amazing experience, because when I decided last year after my meeting that we're going to do this, after thinking about it, of course, for the reasons I gave you, people have come on their own. We've not forced anyone to come. On the contrary, I think we're seeing people migrate here from parts of Asia and the UK for the various reasons I gave you. And it's very easy here as an outsider to bring that talent in here. It's quite easy to get the visa, etc. So now we found it very easy. Now we have a small number of our people, they can live in Dubai or another place and just commute, but they have to work in the office. That's what we want. And I think
you're not a work from home guy.
We're not a work from home guy. No, absolutely not. That's another topic. No, we haven't found it at all. And once you get those people to come, they want to come for the reasons I gave it. It may be because we're not an American company, therefore there are some advantages. It's a bit closer, etc. The rest snowballs, and that's why we are where we are. And I think that we have a chance to, because of our situation where we are, to maybe others can come as well for the reasons I gave. And I think in a way Abu Dhabi probably undersells itself for all the reasons I gave you of why this is an incredible place. Definitely for what we do, which is trading markets.
So let's get on to those markets. And macro is back. That's the sort of big message. Before I ask you about the current state of the world and where you think it's going, maybe we'd sort of do a bit of history. So Alan and I, back in 2007, in the early summer of 2007, we were both in Denver. We were attending a conference in Denver, and we'd traveled there together. And I remember you telling me, Alan, that something really bad was about to happen to the global economy. And I was, at that point, the British Conservative Party's Treasury spokesman, finance spokesman. And I thought, well, this is interesting. No one else is telling me that things are about to go wrong. And you were the first person in my world that told me that a financial crash was coming. Just to tell me something about that experience, because it was so formative for Brevan Howard. You made a lot of money during that period. You traded on the volatility. And you, I think, predicted the behavior of the central banks and the governments in that key couple of years. Looking back on it, what are the lessons from that period, and what did it lay the foundations for in the 15 years since?
So because we think about the downside all the time when we manage money, because for us, the most important is keeping the money safe and doing a good job. we always have that in our mind. And when we were discussing about a year before it started, there were signs and the other thing I would say is we spend a lot of time looking at the weeds of the market. And in this case, it was some of the French banks,
Yes.
where you could see some beginning signs of distress in the money market. So by looking at really understanding in depth the plumbing of markets and what markets all about, it allows you sometimes to predict what's going to happen, but more importantly, to be ready for those events because no one knows they're going to happen for sure, and to make sure that you're in a good position when they happen. So if we go back to 07, 08, after the Bear Stearns bailout, we immediately started unwinding any counterparty risk with Lehman Brothers and others, with some of the others. And with Lehman Brothers in particular, with those counterparty risks, you have to realize that you may think you've unwound all your risk, but you haven't. And one of those easy ways of still having the risk on was with the repo. The repo's not on your book, but actually you're going to get the securities back a bit later, but it's not on your book. So we went through in depth every single thing because we didn't know what was going to happen with Lehman's. We thought there was a risk, but we were certainly not predicting they were going to do what they did. But by being in a position where we didn't have any exposure to them at all, coming into the event, we were in a very strong position to take advantage of the markets. The second thing we did that week was that we had some exposure, of course, to some of the American banks, one of the two or three top ones, and clearly, as the week went on, things started to get a bit hairy, so we decided immediately to move all our margin or variation margin that day to Bank of New York into a segregated account, which means it could never be hypothecated or touched. One bank, one or two banks agreed, one of the banks didn't. We started to unwind the trades, and then by the end of the day, the other CEO called me up and said, we're moving it. So that's what we did. So we were after the first week of Lehman's, we had hardly any risk on that could bother us, shall we say. Once you're in that position with market stress, you really are in a chance to take advantage of them or trade the markets cleanly, shall we say. And that's why we managed to take advantage of the opportunities that came out on that specific period.
So that then led to a long period of, as Ray was saying, zero interest rates, free money, which is not easy for a macro fund, is it? And then you come to COVID, which is, I guess, the next sort of big shock. And again, the central banks step in. Tell me about your sort of experience of that. And I know from our many conversations, I think you're a little critical of how I'm putting it mildly, he's very critical of how the sort of central banks and the fiscal authorities handled 2020 and 2021.
So you're right. That period was not the best time for macro traders like ourselves, but you have a choice. Do you decide to change your strategy, take risks you're not comfortable with, or you decide to make slightly lower returns in that period? They're still acceptable. No, as I mentioned, no loss more than low single digits. But of course, and I decided to stick to that, which I'm very happy I did because of what happened in COVID and what's about to happen. So coming into COVID, in this case, because we look at economic models, history, and also the human behavior of participants in the market, we felt there was a risk of this coming into more financial issues. So didn't predict COVID, but because we looked so much into structuring our trades and the sizing of bets, as opposed to just the investment choice, we managed to position ourselves very well in that period of January, February, so that if something did happen, we picked the right asset classes and response functions we thought would happen.
I mean, you had spotted there's a disease in China. You were looking at what epidemics do in the past.
Yeah.
So this is long before the kind of first lockdowns in Europe.
Yes,
and the
but
US.
the information was all available on the web.
Yeah.
Just using it to say, if this happened, how would you structure and size your transactions, take advantage of that? And were there good asymmetric bets, whether you use Merton Share or Kelly criteria, et cetera, to value those bets? And for us, there was a potentially great opportunity if that happened in certain asset classes. So when it happened, of course, we had great returns. My own fund that I was running at the time made over about 100% in that first 3 months of the year. All our funds did very well. Now, the decision that they made to what they did of doing $1 trillion of QE in the space of a week, followed by the fiscal shock addition that happened later, that did save the market. Obviously, from our point of view, we prefer they didn't do anything because we'd have made a lot more money. But I think that was a bad overdid it, and has helped where we're going to happen the next 10 years. That ramification of the action reaction of those decisions after 15 years of QE is probably going to reverberate over the next 10 years.
So in 2007, you told me there was going to be a financial crash. In January 2020, you said COVID was going to have a pretty devastating effect. So what's next? I'm not sure 3 times lucky. Lucky for your investors, but not necessarily for the world. What's your prediction or your anticipation of what's going to happen over the coming years?
Yeah, I think over the coming years, what we're going to see is that 15-year period of zero rates, which allowed everyone to buy anything they wanted in any form, in any esoteric form, lower interest rates every time there was an issue by the Fed. In other words, they came out to bail out everyone over that period. So the mentality of everyone was buying assets is easy. You can pay up, you don't have to worry about liquidity, and valuations continue to rise. That period is completely being shattered. And part of that reason is because the central banks in 2022 got it slightly wrong, because the way they had been for many years looking at the markets is by having a target and inflation expectations, watching inflation expectations in the market, and if they were in line with the target, that meant that inflation short-term, which was affected by inflation expectations, would be under control. We've seen in 2022 that was not the case at all. So it's going to have a review of those central bankers thinking about how to use models into their own thinking of how to set rates. But it means 2 things. One, they will on the margin be more hawkish than they used to be. A, less trusting of the models, and B, to ensure that they don't get caught to restore some credibility that they may think they've lost. And secondly, the amount of debt that's been created over those 15 years means that, including the private and the public sector, not just public sector, is going to mean many more issues coming up. So I think that...
What do you mean by more issues?
More volatility in the markets, because the bailing out or the coming in of the central banks, if they do come in, it will be at a much lower level of asset prices than they used to. So my view is that we're going to have a 5 to 10 year golden period of macro trading, more volatility in assets and economies, including deglobalization, which we saw. William Burns, who's the CIO of the head of the CIA, said a couple of months ago that the world's going through a plastic moment he hasn't seen since the Cold War. All those things are going to mean opportunities for macro traders like ourselves globally with different reaction functions. So it's a great period for us, I believe, coming up in the next 5, 10 years. And I feel vindicated for not changing our behavior pattern in that period before. And so we're set up, in my view, very well for that period by looking at structuring, sizing, models of trades, no very low leverage, and being flexible.
So we've only got about a minute and a half left. I mean, I think one of the interesting things, having watched your career and the business you've built, is that it's gone from being kind of Alan Howard's view of the world, and then you double down on that, to building a firm where you have lots of traders, lots of views, and a multi-strategy fund. And so Brevan Howard is in some ways sort of bigger than you now. How do you run that kind of firm? It must be quite different from sort of just backing your instincts, and you've now got lots of people you need to manage. How do you manage risk in that kind of firm? And what are the future of these kinds of multi-strategy hedge funds?
So we have, firstly, I brought in Aaron Landy, who's my risk manager for 20 years. I made him CEO and allowed him to run the firm. He's much better than me on doing that, as you said. But we have 2 things. We have single manager funds, let's say the old way, 1 or 2 funds which are pure macro and have a very small number of managers, who I try and train them in way I believe is the way to trade, some of those, the younger ones. And then we have a multi-manager funds as well, which so we give investors a choice of what they want. So we're a hybrid of a multi-manager fund as well as some single manager funds. small number. So that's the way we want to build the company up, not to be just one or the other. And I think that allows us also to be flexible to start new funds when we think there's opportunities.
And finally, more and more people based here in Abu Dhabi.
We are going to run out of office space, I'm confident, sometime early next year. So.
Well, if there are any property developers in the room, you heard it here first. Thank you very much.